What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide a daily pulse on the market as well on X at Hemi137. So before we get started, remember to hit the like button and provide any kind of feedback and insight into what you're looking at this week down in the comments down below. So let's go ahead and get this thing started. Let's look at the weekly recap over this past week. We've had a lot of really big information, and it's essentially the start of a lot of big information in the next coming weeks. Now, there's been a lot of essentially greasing the skids before we even got started this week, and very, very insightful into what could potentially be playing out over the next two earnings, as I do believe the next two earnings are going to be some really bad earnings before we get into Q4. But with that being said, let's take a first look at core CPI. Came in at 3.5, so a little bit higher than what was anticipated. Again, understand that it has been inching higher on the last three reports, I believe. So that being said, car inflation is still very high at 22%. Transportation information or inflation is up at 10.7. We get car repair inflation at 8.2, hospital service at 7.5, home ownership inflation at 5.9. And this is one of the biggest problems that we're seeing. And we've talked about, or I've talked about, automobiles as well a lot on this channel. I've talked about home ownership. There's a lot of hidden expenses people aren't aware of. People only look for the monthly payment when they are purchasing a house or a car, and then when they actually have to make these payments, they realize they have to have insurance, and insurance is so high right now. A lot of it, as you can see, car and inflation insurance is more than even the actual payments. You're making almost two payments on a car, then on a house, and that's not including property taxes you have to pay every year uh, on top of everything. And if you have a house, then you have to also pay HOA fee potentially on top of the taxes and the insurance. So it's very, very expensive. It's one of the most unaffordable. I just saw data this morning as well. It's the most unaffordable it's been since 1995. So that being said, we are hitting historical lows on a lot of these different things with unaffordability. And in the same token, as we had the same week where McDonald's was essentially forced in California to have to pay our McDonald's, but fast food workers would have to pay $20 an hour, which essentially forced a lot of fast food companies to either one close or lay off a lot of people, as they can't afford and they can't remain profitable. And this is what a lot of people don't understand. You have the administration who are casting blame on businesses for price gouging and all these things, but ultimately understand that it is upon the Fed and the printing of the money supply that is causing all these problems in this debt-based system that's causing the problems, not the businesses themselves. The businesses need to remain profitable and have good margins to be able to support and employ people and to provide benefits or anything like that, because that stuff is extremely expensive. And then on top of all that, they are the ones that are essentially leading on the bleeding edge of having to put forth 80 100-hour weeks every weeks for years on end to be able to have these nice businesses that we take advantage of to help us save time, or create us new things, whatever the case is, and help us essentially evolve. And then to cast blame on them when they're the ones that are doing the most, or are producing the most for the society, to cast blame on them is very silly, in my opinion, to cast blame like that. But that's what we're seeing, is there's always got to be an enemy when you're trying to divide and conquer. So with that being said, again, don't want to make this political, but this is just, I mean, when you get into the more details and you're talking about macroeconomics and everything, it does get very political. And you have to understand that there's a lot of shadiness when they're going around when you're dealing with lots of money and power. And so again, not something we want to dive into a lot on this channel, but I do talk a lot about macroeconomics. And so again, I ultimately understand that that's where a lot of it comes from. So and how it all plays. So again, this past week, just before we had bank earnings on Friday, you had FDIC essentially says the U.S. is preparing for potential failure of a major Wall Street bank. Just before they started, this came out on Wednesday, I believe, midday Wednesday. So 2 days before they actually started reporting bank earnings on Friday. Now JPM did beat on EPS and revenue, but slightly misses on some other metrics. The CEO, again, he came out on Monday and he also said that he's expecting a lot of things to get a lot worse. And then these are some other comments he made during the meeting. So essentially, the conference call, we must prepare the firm for a wide range of potential environments to ensure that we can consistently be there for the clients. And then also, you said we have never truly expected a full effect of quantitative tightening on this scale. And something I've talked about when they were essentially increasing rates was the fact that it was at a very historical rapid rate because they knew they were behind, and so they had to catch up. But the problem with that being is that interest rates were so low for so long, a lot of these banks started to buy bonds, and now they are so underwater from buying these bonds that this is why we've lost a lot of these banks. And again, they are casting blame on crypto. Crypto has been what the problem is when we've seen crypto essentially in this particular environment. Crypto and gold have been going sky high as people are concerned about the dollar. And then you have the BRICS nations who are trying to get off the dollar. And a lot of the countries now aren't even accepting the dollar. So that is one of the biggest concerns there. And then ultimately, median monthly mortgage payments in the U.S. Hosts a new record high of $2,747 a month. So that's on average. So that is very expensive across. A lot of people can't come anywhere close to paying that much a month just for owning a home. And this doesn't include the taxes, the HOAs, insurance. And so on top of all that, that's just the monthly payment outright. So again, there's a lot to have to deal with there. So again, very tough position that the market is currently in general. So don't want to give too much information on that side. I want to start pushing more towards just scheduled events. It's good to know what's going on as the moves take place, essentially on this chessboard that we're playing. More like 3D chess at this point, right? And understand what could potentially come, because right now, again, and something I've always talked about, the linchpin at this point, we have high CPI that's been on the rise, commodities that have been on the rise over the past couple months as well, which is highly concerning because we're not even into summer months. But again, ultimately understanding that where we're currently sitting at, the linchpin is the rates. If the rates go up, that could cause panic in the market. If the rates start cutting, depending on how aggressive they get, again, ultimately understand there will be an event. And then again, the following events after that will be what we need to pay attention to the most on what could be potentially happening there. So with that being said, we're going to have to really determine, when the rates start cutting, we're going to eventually start pricing in a recession. But again, ultimately understand that first rate cut is really what we're paying attention to, interest rate, and essentially what the and how quickly they do that, right? The quicker they start doing it is the more panicky they get. The market will start to panic and the market will start to sell off heavy. And again, it's not just cut and then start selling off automatically. You cannot expect that, and I've never said that it was going to start selling off automatically, but it will take time when they start cutting. And ultimately understand when they start cutting, it's going to be in a very bad scenario when it happens, and it's going to take time to play out. You have to understand they may cut once and they may not cut a little bit for some time, and then they may start cutting a lot, and that's when the real panic starts to set in. So that's what you need to pay attention to when we start talking about these rates. And again, it would start occurring over multiple months, right? It wouldn't just be like, oh, start cutting one cut and then that's all they do. That really doesn't do anything, right? That really doesn't set in panic. But when we start making multiple cuts, then that's what's the concern is. So again, we haven't even reached that. We've talked about it, what, in the beginning of last year, and then early here this year in March, and then now they're talking about no rate cuts at all, because inflation is running up, and that's the concern right now. So even though Powell said that wasn't a concern, but now it's a concern again. So we'll have to see. So again, you're going to get mixed information to confuse you. They're just as confused because they don't know what the right step is going to be. They would rather try to be more reactive as opposed to try to be ahead of the curve here. So again, look, there are some banks even talking about that. What could potentially happen is we can see 8% interest rates would be crazy, right? And consider that we're not even close and have to continue to start bumping up our rates, which would draw panic, and then you would have a correction at that point. You wouldn't price in a recession, but you would definitely have a correction because we aren't paused anymore. So just keep that in mind. So just expect more volatility and understand that I've talked about this from the beginning. It's going to change back and forth because these metrics keep changing and these projections keep changing. So the market will change. There'll be lots of ups and lots of downs. But again, ultimately understand when we start cutting dramatically, like we saw in China, and then they start printing money because they're in trouble, then that's going to be a problem. So we'll see how that works. But this week, as far as like scheduled events, we're getting into earnings mode. So there's going to be a lot of earnings. We're not so concerned about the actual events. Typically, they hold off on a lot of like major events anyway. But again, understand there's going to be a lot of Fed talking through this week. There'll be a lot of Fed just talking around this time because there's a lot going on. This is what I talked about, is they try to congest everything with tons of information. So hopefully you missed some of the details. But on Tuesday, Fed Powell speaks at 1 p.m. Eastern Standard Time, 1:15 p.m. Eastern Standard Time on Tuesday. Again, I don't know how that is going to really affect the market, but we'll see. Fed minutes at 2 p.m. Eastern Standard. This is actually incorrect here. I think that was from the last week. And then on Wednesday, we have the Beige Book at 2 p.m. Eastern Standard Time. Again, I don't know how much weight that's going to have, but the Beige Book will give us insight into the next monetary policy, which is on the 1st. Again, there'll be blackout week next week, I believe. Before monetary policy, there's always a blackout week, so you won't see any Fed. So you'll probably get a lot of really active Fed members talking this week, especially with the banks. This is something else I noticed when we get further down here is they don't have Tesla reporting this week. They've changed it again. So now it's a lot of chips and Netflix, and then the following week I believe is when Tesla reports along. They're bringing that back into Super Bowl week, which I talk about. They pull things out to kind of get a gauge on things, then put stuff, and they move stuff around to kind of get an idea of what's happening. And since chips have led this whole rally, they've been trying to essentially put their feelers out for chips. So this week we have a TSM and ASML, and they give us a flavor of what's going to happen with the chips before NVIDIA reports like 3 weeks out from now, so 4 weeks out from now. So upcoming events, monetary policy, again, May 1st is the next one, May 15th is the next core. Upcoming earnings. Now, this is something I talked about as well. They're spreading a lot of these out. These are only ones I am watching. There are tons of earnings this week, especially with banks. So we really want to be watching that, especially after what the FDIC said last week. Again, they were greasing the skids, so it'd be very important to be watching and looking for headlines this week with all these banks reporting. Monday, we start with Goldman Sachs. Tuesday, we have Bank of America, Morgan Stanley. Again, if you can watch how they strategically place this and go back to my last earnings cycle and look, because I throw up these earnings cycles so you can watch and see how they start moving these around because of the current environment. And so right now, Goldman Sachs, another big bank, will have them report on Monday. If they do good or bad, whatever the case is, Tuesday, you get a mix of Bank of America and Morgan Stanley. Then we start getting the chips on Wednesday, Thursday, and then Nflx. Again, Nflx is a good gauge to really determine what is going on with consumer. If Nflix has high subscription count, that means this consumer is in really bad shape. They're looking for cheap entertainment. If for some reason that starts going down, that could be concerning, that people can't even afford Netflix. Is essentially people are spending extra money or splurging on grocery store items because that's cheap entertainment. So that's a good gauge for that. Again, this is something I noticed this week and I've talked about last week. SPX typically averages around, if there's no major event going on, it can float somewhere between 55 points to 60 points. They're pricing at 101 points this week. So they're doubling the move this week. They're expecting a big move with all the banks reporting. Again, they gave you a warning shot. It's not saying something is guaranteed to happen. They got some feelers out there, so they kind of already know what's going to happen. But to kind of grease the public, they try to again put out these little articles to try to help grease the skids. But the fact that they're pricing in a 100-point move this week on the general index, if banks start failing, that could cause a run this week, and that's something we need to be paying attention to. That could be a possibility. So you have a lot more banks reporting, especially the ones and the SDIC's statement that it could affect. If banks start selling off heavy, that's going to impact SPX, despite what tech does right now. And you have a lot of that. You have a lot of chips and banks this week. So that a lot of chip plays this week in banks. So it's going to be extremely important. Tesla has come down a little bit from last week, a point. Boeing is still high. Boeing, bad news. Again, don't know why it's so high as far as the price of the stock. But again, it's backed by the government, so it stays at 200 or floats around 200. $200. And then JPM is still very high at 6. They were up at 8. So they were double on since the earnings last week. They started selling off heavy on Friday because of the statements from Jamie Dimon. And then now this week's still very high. This is typically sits around 4, so still 2 points higher than it was last week. Again, if we get all kinds of panic in the bank, you can guarantee that JPM is going to pull back from that as well. So again, very, very big week. Like, you don't want to be trading SPX this week because of the fact that they're going to have a 100-point move. If you grab a put and the thing drops 100 points, you'll be lucky if you can break even. They're not going to not allow you to trade, but in other ways they will do that. They will price in 100 points so that it burns so fast that essentially whatever option you buy on a put to try to take advantage of the market selling off, it will just be burning your cash. So that is how they prevent people from shorting the market and drawing panic. Is they essentially they price in so much that you can't take advantage of what's currently going on. So again, the only way you could really potentially even do anything with when expected moves are this high is essentially buy options at the money or in the money for that to even make an impact. But then again, you're essentially buying a 100-point move anyway. So to try to take advantage of big market moves, you're going to be spending a very high premium in hopes that you can squeeze something out of it. So essentially what I'm saying is the squeeze isn't worth the juice when they are pricing in so much like this. So again, very interesting to watch that. And again, why I have this channel, because it's simple things like that if you paid attention to, you would know what to trade and what not to trade, especially if you're trading options. Or just in general, if you're looking in the market in general, it's good to watch options, even if you don't trade them, just to kind of see what is expected, because this is why I also do events, because events can make big changes and you can take advantage of options during big events. That's why I watch them. But again, ultimately understand that, again, if they price in so much, you have to look at individual stocks this week and see how that could potentially affect it. Potentially play bank earnings that aren't priced in, or potentially look at potential value, or look at some other alternative that isn't pricing in 100 points, right? So there's other ways you can try to take advantage of it, but again, don't directly trade ones that are pricing on 100 points like SPX is this week. So again, we've had a pretty steady decline. We had some, again, fear coming in, especially with what Jamie Dimon has said, with the core inflation being hot is very concerning. So we had a lot of selling this week. But we'll see what happens here. Ultimately, I think we're kind of aiming down for that the 5100 mark. Again, this is these two orange markers here, or an orange, these two like purple markers here. These are the daily. This is the 20 daily and the 50 daily EMAs. So typically, when you get a break, you'll get a retest of the 20, and then you get a sell off to the 50, and then you get a nice bounce off the 50, potentially back up to the 20, and then that might be your test to rebreak. If it does come back down to the 50 after that bounce, typically that means it'll break, and if it breaks that, then you get a bigger fall here down to potentially that 47.50. It's not saying it will hit it, especially when you look at higher time frames. The chances of it hitting here means there has to be a lot of fear for it to touch a 200. It can break and go about halfway till roughly around the 4900 and float around here and then recover. So just keep that in mind. But once you get a break here, you'll get a big drop if it can't hold the 5100 this week. So again, it all depends on what the events are and headlines. This is why I emphasize specific things, because those are things you have to watch. Headline news, that the market is driven off of headline news. If you get a bunch of bank failures, you get people doing bank runs, you're going to draw a lot of fear back, especially because they've essentially spent over the past year and some change trying to ease everybody's mind by bailing out the banks, saying everything was okay, when in fact we knew all the banks are underwater and being essentially, you as a taxpayer are bailing them out whether you choose to or not. They are doing that. And so with that being said, again, it's a hot mess. And as of right now, we'll see what happens if this continues to sell off this week. Again, if we get a lot of bad bank earnings, could easily do that and potentially break that. But again, once we break that and do a retest, looking for this thing to really start selling off pretty heavy this week. So let's take a look at Bitcoin. Now, Bitcoin, again, despite with everything that's going on, the concern in the market, building a nice big flag here. Expect this to chop between roughly the 73 and roughly around that 65. It's going to get tighter here, I think, till we get out of this month right into halving. This will essentially end right at halving, which I believe is about a week away. I think it's next weekend. And then once that final block is done, then we can we'll break either way in and out of here. Again, if we don't get a cut within the next month, I think the our Bitcoin will just explode out of here. But you're getting some very nice consolidation on Bitcoin, so watching for that, moving into halving. Then I want to do gold today, obviously, because gold has been explosive since the concern of inflation. I want to actually break this down in a higher time frame, because you had major support here at the 191 mark, but we didn't even retest that. We just exploded out of that. So we are starting to wick and see a top here at the 225. We'll see if this thing can pull back. Hopefully at least halfway would be ideal, roughly closer to that 200 before the next major move up. I think in the next coming months, things are going to get a lot worse. So like I said, the stock market will recover a lot quicker than a lot of things. But again, you're going to see a lot in headline news, but the market will recover a lot quicker. So, all right, let's take a look at Tesla. Now, Tesla, you can look at this. I think it's the monthly on this one. Yeah, that's where I drew this. So the monthly looks like this. Tesla's looking in that nice descending wedge. I'm expecting this to hold this 150 really well. I'm actually expecting this to do poorly on this earnings, but I don't expect it to break 150. If it does, we could get some heavy selling, maybe revisit the 120 again. And then I think that will be very short-lived. And I don't really see Tesla dropping below 100. I mean, anything is possible. It just all depends on the timing and the events that are occurring. If we get multiple bad events that occur, I could see that. But they did come out with a robo-taxi. They said they have a date for August 8th, which that is essentially where they do a lot of prototypes and stuff during that day. So probably some sort of prototype for that, for the FSD. So they did announce that this past week. So this may recover out of here. If we do break out of here, expecting this thing to wedge a little bit more, especially trying to get through the next coming months. So as we get closer to election time period, I think at some point this could break out of here. Again, Tesla really, I'm just expecting it to consolidate a lot more. You got a huge wedge here. Almost a descending wedge, which typically leads to at least halfway push up from that point. They have a lot of things coming in the pipe, so it'll be really interesting to see. And one thing, again, big to note about Tesla is their services for energy has been doing very well. So despite all the hype or the no hype essentially with EV, they're again ultimately understand their services has been helping out essentially their business a lot in general, and then kind of picking up the slack where there's been lack of sales in EV. And then again, ultimately understand they have FSD. They have the Cybertruck, which is one of the most popular vehicles I think I have ever seen in my life. And celebrities always want a Cybertruck. Every celebrity has a Cybertruck. That's like the hot vehicle right now. That's not even mass produced. You have to keep that in mind. And then again, we're not even talking about AI and humanoids and robo taxis. And they also talked about 99 dropping their plan for robo taxis down to $99 a month, which is huge for them. It opens up the opportunity for a lot more other people to jump onto robo taxis, which is I think another big benefit. So again, if all those things play out for Tesla, Tesla could be again the biggest company in the world, and I think it could easily surpass Nvidia. But you're talking about a couple of years here. You're not talking about the next 6 months. Although I do believe in the next 6 months it could have a big breakout moment. But ultimately, I think more so Tesla's big move, I think could potentially come over a year, but I'm more so gauging like 2-3 years. Tesla will have another massive move like when it first did with EVs. I think that move is coming very shortly. Again, with acceleration of AI and FSD, they could drop some news that we weren't expecting, and then they could just rock it up. But again, ultimately understand, I think it's very undervalued for, again, people just assuming or Wall Street just pricing in EVs because that's not all. It's a tech company, in my opinion. But again, it's only going to be interpreted as a EV company right now. So with that being said, let's take a look at some of these other ones. We'll take a look at PayPal because I keep talking about PayPal all the time. Again, it's very choppy lately. I still want it back down by the 57. Again, if they don't do a bunch of cuts or anything here soon, this may just chop in between here. We might start riding back up. So hoping it does come back down one last time. We do have earnings come up, so we'll see how that does and then take it from there. BA broke. It finally broke the 180 mark here and is selling off down to the 160. Again, this thing has some room to drop. It has a little bit of cushion here, but again, ultimately, I think it's coming down to that 125 mark. Again, with all the bad news, I'm surprised it's even been holding this as high as it has been. So it's good to see it's actually coming down. But expecting if it breaks this level here, the 165, I'm expecting it to come down to the 122. So watching that. Again, this plays big on value. So value selling off. If banks start selling off, a lot of pressure is going to be put on tech, and tech hasn't really been the greatest as of late. So again, once you get all industries starting to roll over, that's going to put a lot of pressure on the index, and then we're going to start selling off and having a natural correction. Again, not a crash or anything. Not saying a crash cannot happen. Again, all it takes is some news, and then that can change the dynamic of the market at any point. So just always keep that in mind. And then we got JPM. JPM reported earnings, big red candle on Friday. It says that's in 1 week, but it was really in a day. This thing gapped down and it's been selling heavy. I have talked about this before. You can't go just straight parabolic because it comes down way faster than it goes up like this. So expecting this to at least get back down and here the support at the 169. We'll see how well it holds there. At least 50% of this move, and then we'll see where the market is in general. If we start getting more bad news, this thing can come back right back into the zone where it held for so long, which is roughly around that 155 to 140. I was kind of watching on there. Bank of America has also got a big earnings this week. Got some selling off just because of what was going on with JPM. Again, you got support here at the 34 mark, and you got another support here at 32. So watching those, your top kind of really being up here around that 38 mark. So that's what I'm watching for this week. Again, it's going to be a big week. You need to really pay attention to what is going on with headline news, and banks will be, like I said, I know I kept reiterating this, but the FDIC has already greased the skids about banks losing a bank. So that they're telling you you're going to lose a bank this earnings cycle. What bank is it going to be is the question. And if there's a lot of worries and concerns, and JPM missed on some specific metrics, they're supposed to be the best bank for the U.S. If they are struggling, what is that going to tell you about the rest of the banks? Because a lot of these banks are doing really, really bad. Wells Fargo, I know, has been in a couple people have talked about Wells Fargo and potentially them, their books not being very good at all. And so we'll see what happens, but that could be one of the ones that are under fire. We don't know. But we'll see what happens in the next this coming week will be very important. And then again, we're not even the Super Bowl week. Super Bowl week should be the week after that. And then we should start getting some major headliners, and then we're going to ultimately be looking for Nvidia after that point. So if you made it this far, go ahead and drop a like. Again, none of this financial advice. Have a great day, and I'll see you guys later.